Thanks for tuning into Countdown. My name is Neeraj Shah and it's getting ominous. Let me cut straight to the chase. 183 points now down for the Nifty 50. Remember, in Friday's session, I think on Countdown, we were talking about how if indeed the 11,000 mark gets taken out or 11,100 gets taken out as well, the selling could get exaggerated and we are probably seeing signs of that. So we are down at the lowest point of the day for the Nifty, about, as I said, 183 points. The Nifty Bank too at 2.17 is down, but the Nifty Bank was anyways down about 2% for most part of the trading day today. The latter half of the selling doesn't seem to have happened only in the financial names, but in a clutch of others too. So quickly, first, before I get the heat map though, just want to mark the volumes in today's session, because at lunch we were already substantially higher than what the average volumes are. 26,000 for the cash market volumes, and we are already at 31,000 for the cash at the start of Countdown. FNO volumes at about 7.7. I think we'll be very close to the 10 lakh crore mark on the NSE FNO as well. But the cash market volumes, remember Friday was 64,000 crores, currently about 31,000 crores. So the volumes are above par at the current point of time. Quickly, without much ado, just the heat map and show you there, I believe, a large tract of red, and clearly seeing that. But NBFCs right out there, HDFC, Bajaj Finance, Indiabulls Housing Finance down and out in the session today. M&M and Maruti too are down in the session. Bajaj Finserv is now close to that 6,000 mark as well. Some stronger hands, the likes of IndusInd Bank, etc. too have fallen, and not enough gainers. TCS is at life highs, Tech Mahindra and Infosys, and therefore the IT space is giving company and some bit of benefits to ONGC, Reliance and Oil India from the broader market space. So a bit of a defensive mindset, only IT and only oil and gas, and that too upstream are the pockets which seem to be doing okay for themselves. But if this is the large cap picture, mid caps got a sorry picture too, Devina.
It's a punishment in today's session for stocks within the mid-cap and the small-cap space. The indices themselves have given up much more than what the large-cap index has done. So I'm going to quickly look at a few stocks, and continuing from the pain on Friday's session, a stock like a Central Bank of India is now down 16%. You've got an Edelweiss which has taken a hefty knock of 10-odd%. The stock's now trading at 212, which was one closer to about 280. A Bajaj Hindustan, again, second straight day of 10% given up. You've got the likes of a PNB Housing Finance, which is down 8%, Motherson Sumi, Canfin Home. So the usual suspects from Friday's session have bled in today's trade as well. IRB Infra, you've got National Fertilizer down 7%, Repco Home Finance, REC, DLF. You put a finger on that and the stock's down about 7 to 7.5%. We've got the likes of Motherson Sumi, which is down 8%, and Bakrangi is also down about 8.8%. Shipping Corp, Adani Power, and Interglobe is also looking weak in today's session. So following it up across the board, not just in the financials or the NBFCs, there is pain across the board, and the mid-cap index itself is down a massive 2.5%. But it is important to see from a futures and options point of view, what is the kind of build-up that we are seeing after these 2 straight days of heavy cuts that the markets have seen, Agam.
Right. So, we've been talking about the 11,000 mark over the previous couple of days. Why? Because that's where we saw the maximum open interest with respect to accumulation in puts. Now, should we see the Nifty close below 11,000, it could be a little bit of a problem, because that's when you start seeing unwinding in those puts, which means that your range, your lower end of the range, will shift further downwards. But when it comes to the futures at this point in time, there certainly is a substantial amount of short building up right now, and it's the same for the Nifty Banking Index too. In fact, the Nifty Banking Index taking a little deeper of a gash when it comes to your September futures. That's down around 2.3%. Let's bring in the India Volatility Index. We haven't seen the VIX above the mark of 16 for a very, very long time. In fact, the last time we saw that was back in February of 2018. It's back above the mark of 16. In fact, inching towards the mark of 17. That's a bit of a concern when it comes to those who are long in the markets. Now let's bring up your change in open interest. Of course, that's your open interest distribution. While we may have seen unwinding coming through in the 11,000 put, we still have that one as the maximum open interest. Let's bring up the change in open interest, and that's what I want to talk about. And as you can see, there's more and more writing in the lower level calls, such as the 11,200 and 3,000 calls coming through. Let's talk about stocks then. And Bajaj Finance, actually, well, it's on everyone's list right now. now, considering the kind of shots that we are seeing. Diwan Housing Finance is the other one. It is advancing in trade, but this is after a substantial 43% knock that we saw in the previous trading session. So it's a little bit of a recovery. As you can see, there isn't as much increase in open interest for September or October for that matter. Motherson Sumi is the other surprising one. It's taking a cut of around nearly 9% right now, and there's a surge in open interest towards fresh shots. And HCL Technologies, well, I would suggest that the entire IT pack is advancing in today's day of trade, with including something like an Infosys or TCS, but I've chosen HCL Technologies because of the accumulation in open interest in today's day of trade. So we do have fresh longs coming in there, but if you leave out something like an HCL Technologies, there has been substantial weakness throughout. Can we expect recovery? Well, that's something that we're going to have to wait and watch out for.
All right, Agam, thanks very much for that. Important now to get a market view, in a very precarious situation for the markets right now. Saurabh Mukherjea of Marcellus Investment Managers joining us on the phone line right now. Saurabh, complete turmoil in the markets. We wouldn't want to use the word panic, but do you feel that at this juncture, looking at how the last few weeks had progressed with the indices, on a valuation basis being one of the most expensive, there was something that was needed to break the camel's back, and this was it?
I wouldn't call it a panic, because I think, looking at the screen in front of me, investors are doing what's rational. Nifty Banks is down 2.3%, Nifty IT is up 2.3%. I think this sort of move was long overdue, where the investors bought stocks which benefit from a weak rupee, and investors are selling companies which suffer as you enter the part of the rate cycle where rates consistently head north and the currency weakens. So it was a long overdue reversal and pattern where radically overvalued financial services stocks, wholesale lenders to be specific, got sold, and companies who benefit from a weak rupee got bought into. So I wouldn't call it a panic. I think investors are doing what's rational, what's right, and that's what markets are there for, to provide an efficient marketplace for the right sensible economic actions to take place.
But the timing of this, and probably looking at investing some more money at this current juncture, would that be an advice, or still a wait and watch stance is more advisable?
Look, I mean, financials have been overvalued in our country for the best part of the last 2 years, and their financials have started correcting at more or less at the time of the rate cycle you'd expect them to correct, which is rates heading north, the economy is steaming along, inflationary pressures building up, the currency under pressure. Alongside that, the Fed itself in a rate tightening cycle. So wholesale funded lenders logically should correct when you are in a rate tightening phase of the economic cycle. And typically in our country's history, when the Fed starts tightening, within 6-7 months, BankX repeatedly has lost 30-35%. 2006, 2008, 2013, the long history of Indian banks correcting sharply on the back of Fed rate tightening. And as we've seen again in our country's history, IT and pharma are sectors which benefit from a weak currency. They do need that tailwind of a weak currency. And now that we have the currency having lost 65 to the dollar at the beginning of the year, now 74 to the dollar. That sort of tailwind will help the IT pharma sector, but also elements of the auto sector, the auto ancillary sector, which have export orientation, will also benefit. So I'm not so sure there's that much reason to panic for an investor who's sensibly diversified across sectors, but certainly not the time to buy financials. Financial services, wholesale funded lenders are still significantly overvalued by the Indian market. I think there's a long way to go there. I would say another further 30% correction in wholesale funded lenders is warranted.
Saurabh, do you think that we actually overshot, earnings growth in terms of the equity market performances? I mean, and this was probably required to bring it back to normalization?
So I think let's first focus on the market as a whole there. I think this is the first year, the current year that we're living through. Ironically, this will be the first year in the last 5 years where we get double-digit earnings growth. I still do believe, I think we are heading for double-digit earnings growth after a gap of 5 years. And yes, in the preceding 4 years, the market overshot itself. There's no great sort of sin in that. That's par for the course That's par for the course in financial markets. Markets are intended to preempt the earnings recovery. Where I do get a bit worried is people believe the market will rise when there is no earnings growth and the market will rise when there is earnings growth. That's really delusional. Typically, what you see is once the Indian economy steams into life, once consumption picks up, there are supply side constraints in our country, always have been there. And that in turn results in inflation flaring up, rates going up. And because of the peculiar nature of our lenders today, we have very few CASA-funded lenders in our country. Primarily, they're wholesale-funded lenders. As inflation and rates flare up, you get this correction, you get the sharp correction in financials. So I would say the market's around 15-20% overvalued, but financials is there. There's still, I would say, 30-35% overvaluation. And in a way, the bulk of the market correction will be via financial services stocks. But even as that happens, there'll be abundant opportunity to make money through IT, pharma, and export-oriented manufacturing stocks.
Saurabh, good afternoon. Just wondering, if you were to be writing out a note to your investors, current and potential investors, and if you were to assign a multiple to the markets currently, we were trading for the best part of 2018, circa 18 to 20 times. With this correction, with this higher cost of credit and with this Fed taper, etc., that you've all spoken about, do you reckon that the rational PE multiple, the rational PE multiple should be lower than where we might be currently, depending on what earnings estimate, of course, that you have?
I think we're still at, India still at around 21 times forward, 21 times FY19. The market's still at 21 times FY19. 17 to 18 is our long-term average, has been for the last 10-15 years. I don't see any reason why India doesn't warrant that 17 to 18 times forward earnings. So we're at 21 times forward, and I think we'll trace a journey back to around 17 times forward earnings. And in a way, the crux of that journey, crux of that retracement will be driven by financials.
So, Saurabh, the other bit is I heard you mention in one of the opening thoughts that you reckon that there is some more downside left for financials, wholesale lenders in particular. We've already seen a mean reversion of sorts for a lot of them, the highest quality names to the mid-sized quality names, anywhere between 30% to 40% from the highs that they've clocked in 2018. Are you saying there is still more 20-25% downside from these levels for these companies?
Yeah, so I think you've got to realize so far everything that's happening, rightly or wrongly, is happening on the back of conjecture and speculation, right, on ILFS and the coupons and the yields on various wholesale funded lenders. I think the journey ahead of us is, as these lenders try to refinance the monies that they borrowed last year, naturally they will have to pay significantly higher yields on the monies that they borrowed over the next 3-4 months. Remember, the 10-year bond yield itself is up 170, 180 bits, right? So the wholesale funded lenders presumably will pay a liquidity premium over and above that. That in turn creates its own issues around net interest margins and around NPAs. So far, by and large, the correction has been on the back of hearsay and speculation. The fundamentals of the situation in terms of higher cost of capital and higher credit costs, I think that's yet to play out. That will play out more gradually over the next 6 months.
Saurabh, I don't know if you want to answer this or no, but let me try. If you were to write a strategy note right now, you've crossed over to the buy side, I know, but if you were to be writing a strategy note today, would you believe that your target for the Nifty or the Sensex, as the case may be, would be way lower than what it is right now? 12-month target.
I think both in my appearances on your show and in my other media appearances, I've been saying for the last 12 months pretty much the same thing, that the market's overvalued. And I'm saying much the same thing even now. I think the Indian stock market still is 15% overvalued. And as I've said before, I reiterate, the crux of that overvaluation, the bulk of that overvaluation of the Indian market comes from an elevated price multiple attached to wholesale funded lenders. So as that elevated price multiple associated with wholesale funded lenders corrects, in a way the heat will be taken out of the overvaluation in the Indian market. And at the same time, in parallel, there'll be opportunities to make money in export-centric sectors.
Right. Sort of just one last question before we let you go. Just, comment on what we're seeing now for the debt mutual fund industry. expectations are that there could be further pressure in terms of redemptions within the industry, and thereof the implications on equities.
I think this is one area where we do need regulators to step in and protect the liquid funds, because rightly or wrongly, the liquid funds have become the biggest suppliers of liquidity to the Indian financial system. As we all know, the PSU banks have been ground into dust almost over the last 6-7 years by their balance sheet challenges, and I think it's imperative that the regulators step in to provide a backstop to whatever IIFL related issues that the liquid funds might face. I think it's really, really important that happens forget the stock market, but the broader economy, for the liquidity provision in the broader economy. We do need the liquid funds to be looked after, and I sort of hope and pray that we get regulatory intervention on that front.
Got that. Saurabh, we'll leave it at that. Thanks very much for joining in. I appreciate you taking out the time and speaking with us here on the show. Let's take a quick check on what's happening in the European markets before we get in Michael Hewson, Chief Market Analyst at CMC Markets, to talk a little bit more about the global market setup. So that's the FTSE 100, the CAC and the DAX down under marginally in the red, but closer to about 0.2 to 1/3% cuts across the board. Let's bring in then Michael Hewson, Chief Market Analyst at CMC Markets. Michael, good afternoon to you. All eyes now, focused on the additional tariffs being levied for $200 billion and China's retaliation to that. What's the likelihood of that? I mean, $110 billion worth of US goods into China, that could attract tariffs. I mean, what is the market mood right now regarding this?
Well, at the moment, I would suggest that the markets are fairly relaxed about it. We've just come off the back of 2 weeks of gains in European markets, and yes, we have had a little bit of a softer start. But I think the markets are looking at the story in the round in the context of the fact that China's retaliation was fairly modest. It was really only a 5 or 10% tariff on $60 billion. An extra $60 billion worth of US goods. But I think that has to also be put in the context of the fact that China's retaliatory steps are likely to be fairly limited, given the imbalance between the amount of US imports that they have and obviously the amount that they export to the United States. China can afford to play a slightly longer game when it comes to its approach to the United States. And I think the fact that they've broken off trade talks, I think, speaks volumes. And the fact that they've implemented these retaliatory tariffs, I think the risk is that Donald Trump, US President, could actually respond by actually bringing in an extra tariffs on the remaining $260 billion of Chinese goods. And I think that's something that the markets aren't quite yet pricing in.
How closely are you watching the FOMC and the decision that's coming out from the Fed this week?
I'm watching it very closely, not for what the Fed does, but I think in terms of what its guidance will be going forward. I don't think it's any surprise that we will probably see a 25 basis point rate rise, pushing the Fed funds upper rate to 2.25%. I think the big concern, at the moment, is the pace of future rate rises going forward. Now, at the moment, it's quite likely that we will also get a rate rise in December. The big concern is if the Fed guides more aggressively, more hawkishly in terms of its guidance for 2019. And I think this is where the story could get slightly murky, because I think if the dollar starts to rebound, and it has been falling of late, if the dollar starts to rebound and the pressure on US yields continues to rise, that could have significant consequences for emerging market currencies and economies.
How closely are you watching, what's happening in emerging markets and the sell-off there within?
It is very concerning. We have seen a little bit of a rebound in the last couple of weeks, but as I said, it's very much a dollar story. I think how emerging markets recover over the course of the next few weeks will be largely dependent on how the US dollar does and how the Federal Reserve guides on future monetary policy. If they express concern, if Fed policymakers express concern that the trade spats could have a significant effect on the US economy and the dollar drops as a result of it, that could take the pressure off emerging market currencies and actually bring about a little bit of a recovery in emerging markets. But very much, I think, it's going to be largely dependent on the Fed rate meeting later this week and their guidance.
Brent crude touched $80 per barrel, Michael. How worrisome is that?
I think it's very worrisome, particularly for emerging markets. If their currencies remain weak and Brent crude starts to head towards $90 a barrel, and I think that could happen if we break above the highs that we've seen earlier this year, then I think there could be a significant inflationary shock as a result of that, and as a result we could actually see the Fed start to hike potentially more aggressively, particularly if they think there's going to be an inflation story seeping into the US economy. We've seen US wages start to move higher. The inflation outlook does remain fairly benign at the moment, and I think the big tipping point for me is what level does Brent crude have to get to before it starts to hit demand. At the moment there doesn't appear to be any evidence that it is, but I think if it starts to head towards 85 or $90 a barrel against a backdrop of a weak emerging market currencies, then that could be a significant concern for me as well.
God, then Michael, thanks very much for your thoughts. Appreciate you taking out the time. That's a global opinion coming in there on the Fed decision that happens this week, what's been happening in emerging markets, as well as crude now crossing that crucial mark of $80 to a barrel. But a quick look at the Nifty as well as what's been happening in the rest of the market. For the indices now, the Nifty is trading down by 1.7%. That's shaving off about 188 points. Remember, on Friday's session, it hit a low of 10,866. So a closing below Friday's low is going to be extremely crucial to chart the way forward for the index. On the bank Nifty, on the other hand, the low has been breached. Friday's low was 25,053. We're currently trading at 25,033, and a close below this. I mean, if we close around these levels, it's going to be sort of mayhem for the index. It's RSI, which is its relative strength index, which is a technical indicator that most watch out for, is already way past into the oversold territory. There, it's now at about 20, and the indicator hits off at about 30. That's below which it goes into the oversold territory. And the last time this happened was in 2008. So it's been almost a decade since we've seen the RSI actually breach those levels.
Yeah, well, indeed. Let's talk about all of that and more, because the correction has lasted over the last 3 days, eroded about 1.15 lakh crores from Nifty's market capitalization. Jayesh Kilani is here with some charts, some numbers, and some market cap losses. Jayesh.
Neeraj rightly mentioned that the last couple of days has seen more than 1 lakh crores being eroded from the Nifty 50 companies itself. Now, if you look at the breakup, how it stands is that nearly 2/3 of the companies, or more than that, out of the 50 have seen a market cap erosion for themselves, while only 1/3 or thereabouts have seen some bit of market cap addition Friday and today. Now, if you look at the top 5 Nifty stocks that have in fact added market cap, what really stands out is a couple of sectors, which is the energy space and the IT space. So leading the top of the charts is TCS, which has added nearly 40,000 crores, and the other likes of ONGC, IOC, Reliance and HCL Tech also feature among those lists, where they have individually added anywhere between 2,000 to 8,500 odd crores. But if you have a look at the losers, and that's the more interesting bit, all the top 5 except for one stock belongs to the financial space, and these are big heavyweight names. For example, you have the likes of HDFC, Kotak Bank, Yes Bank and Bajaj Finance, which feature in the top 5 losers by market cap. Each of them have lost more than 13,000 to 20,000 odd crores in terms of market cap, with the sole exception that I was mentioning, that being Maruti from the auto space. Remember that it has in fact lost about nearly 17,000 odd crores. So really the key takeaway is the financial space on the downside and energy and IT on the upside.
Okay, Jayesh, thanks for putting that into perspective. So, well, that's some losses that are coming to market capitalizations. If you can actually pull up that RSI command on the Bloomberg terminal and then show it to the viewers, something that we were talking about too, and it shows the levels at which the index is and whether it's oversold or not. The Nifty Bank as well. Okay, you can show the Nifty Bank too. I think both of those. Yeah, so this is the index and then the Nifty Bank, and I think that's overshot on the downside if I'm not wrong. Because this shows within a band, but the Nifty Bank.
The Nifty index itself is at the lower range right now. It's not breached below that mark, but the Bank Nifty, as you can see, it's already moved down below the oversold region. So the oversold region marker comes at about 30, and Bank Nifty currently is trading at 20.
At some point of time in the show, in the next 3 or 4 minutes, we will get in Hemen Kapadia to talk about his thoughts as well on this, but it'll be important to monitor. Keep in mind, it's not just financials, by the way, which are correcting. Just before you get a sense of what dealing rooms are recommending in the session today, autos have pulled back big time today. M&M is down about 6 or 7%. It's amongst the top 3 losers on the index. Nifty Auto is down 4%. M&M 7.5% and trading at the lowest point of the day. Maruti is at 7,600 or 7,700 or thereabouts. Yeah, 77, 78. It was recorded a little bit of lost ground from the lows of the day, but was down about 5% at a point of time. And this is a far cry from the 9,700 levels that Maruti was trading at as well. So it's not just financials. A bunch of other names have come off and come off quite strongly in the session today. Some of the auto ancillaries as well, large names, the likes of Motherson, Sumeet, etc., have all come off in trade. So, well, pain across the board for rate sensitives, so to say. And autos firmly entrenched out there. Our dealers talking about that. Let's get a sense from Darshan and Nitin, who join in right now with their channel checks. Chairman, good afternoon, both of you. Darshan, let's start off with you first.
Yeah, the screen looks rather weak. You take it on the fundamental side, technical side, even flow-wise. Some of the dealers indicate that the trend does indicate weakness. So bottom fishing, at least as of now, should be avoided. They expect more weakness that probably will come in on the Nifty and much more on the Bank Nifty, because IT is supporting Nifty today. You have TCS and Infosys. If that was not there, the Nifty would have been down another 50-60 points. Yes Bank has managed to hold on from the start of the day. It's managed to stay in this level. The board meet is there tomorrow to decide the new CEO of the company. So ahead of that, there will be a little bit of volatility in Yes Bank. So that's what's been spoken about. A couple of counters in which money is moving on. Reliance, again, there is money flowing in, and the safe counters of the IT companies. So if you're looking at the top gainers on the index itself, the top 4 gainers are all IT stocks led by TCS, which is trading at record highs. Infosys is trading at record highs. And the last thing that dealers did indicate, avoid bottom fishing, avoid stocks which are trading at 52-week low on the anticipation of a bounce that could come in. At this point of time, that's the trend that's been spoken about. But Yatin, what are you hearing?
Well, Darshan, as you were mentioning, the setup is quite weak. Dealers are indicating that the Nifty should trade above the 11,000 mark on a closing basis today, post which only they will be able to look at some kind of a bounce back for trades. But right now we are just below that 11,000 mark. Probably if the bounce doesn't come post 3 p.m. or 2:30 p.m. Dealers are indicating that there could be a further sell-off which can be seen in the marketplace. Apart from it, the few key events everybody is watching out for in the dealing room is the most important US Federal Reserve rate hike decision, which is on Wednesday night, and the commentary of the Federal Reserve would be important to give a direction to the markets, and dealers probably are looking to avoid any kind of a large trading position at this point in time. Tuesday we have the Yes Bank board meeting to decide on fate of Rana Kapoor and the future CEO appointment. Wednesday, as I was mentioning earlier, the FOMC rate hike decision. Others include ILNFS board meet as well as the Finance Ministry board meet with the PSU banks. Of course, the ILNFS default is something which dealers believe weighed on the markets earlier last week. But the board meetings, fund infusion, the comments from the Finance Ministry regarding PSU banks and the lending to NBFCs is something important that the dealing rooms are watching at this point in time. But of course, what's not working in the marketplace is that even if you are in quality names, there are problems. So if you look at Kotak Mahindra Bank, Bajaj Finance, Bajaj Finserv, HDFC Bank, Maruti, all of these stocks have corrected significantly. In fact, HDFC and HDFC Bank are below 200-day moving average. Kotak Bank, Bajaj Finserv, Bajaj Finance, all of these stocks have lost anywhere between 10 to 30% from the recent highs. The kind of correction that we have seen in good quality names clearly have been quite disappointing because a lot of market participants shifted their position in these quality names, and there also most of them lost money. So this is also again a concern point which the dealing rooms are pointing out at this point.
Talking about buying these names, Yatin, that's the question.
Kind of selling that we are looking at even in today, for example, Bajaj Finserv and Bajaj Finance were down, 6 to 8% in opening trade on an intraday basis. Of course, they have made some recovery, but still, 6% down for Bajaj Finance. So dealers at this point in time are, looking out for all of these events that I was mentioning earlier, and post which only they would look at buying stocks, at lower levels. But Fed as well as the IIFL board meet is something that everybody is watching out for. Post only that dealers do indicate that they would initiate some positions. Right now, clearly fear is engulfing the dealing rooms.
All right, Yatin, thanks very much for that. Usually they say quality comes at a price, but it looks like it just went on sale for all of these names. But you really don't know whether you can start investing in them just as yet or no. But let's get in our experts to talk about this a bit more. We've got Hemen Kapadia. He's joining in from KRChoksey on the technical side, and Sumeet Bagadia of Choice Broking is also here with us on the show. Hemen, I'll start off with you. We've constantly, every time you've come on the show, we've spoken about Bank Nifty and what levels on the downside we can watch out for. And it seems like there is no bottom on this, at least as of now.
Yeah, Devina, it seems like a bottomless pit. I wish I wouldn't have had to come for this interview today because.
We're glad you are here, though.
Frankly speaking, it's a difficult task. There was some weakness. I'm not sure it warranted something like this, but then markets have a mind of their own. I wouldn't say fear, but Devina, if you notice the rollovers, we're still Monday, so it's far away. The rollovers are pretty pathetic. That's my fear. If the rollovers don't improve and people continue to hold their current positions, I think the Nifty saw a significant cut on Friday. I think it was around 17%, huge. So I'm assuming that is profit booking. The people who were short squared off their position, booked some profit. But if you see the next month rollovers for the Nifty, Devina, it's around 36 lakhs, which is woeful. And the Bank Nifty is a joke. It's 5 lakhs. So thing is, if the rollovers don't improve and people let the current position expire, that means we could tank further. The only way we see a recovery coming in is we see an improvement in rollover than the next one. That's where we see a bounce coming in. So as of now, I think it's looking pretty bad. But just when things look bad, I think there could be something happening. Yesterday's low, as far as the Bank Nifty is concerned, 10,866, I think could hold. If that holds for the next 48 hours, I think chance of a recovery can come in. And for the this was the Nifty. And as far as the Bank Nifty is concerned, there was a tremendous underperformance. We've seen the open interest fluctuate from 29 lakhs to 14 lakhs, and now Devina, the open interest at the Bank Nifty is at 47 lakhs. So, frankly speaking, not sure what is happening, but a bounce. We've come up from 28,500 and we've reached 25,000. So, frankly speaking, a big bounce is in the offing. Currently, that's not on the horizon. If the rollover picture improves, I have a feeling that we see some relief. I think it's overdone for the time being, the way I look at it.
Okay. Overdone for the time being, the way Hemen looks at it. Sumeet Bagadia of Choice Broking with us as well. Sumeet, what's your trading position? As we speak, a bit of a bounce from the lows as well. But what's your trading call on the index or on the Nifty Bank as well?
Hi, good afternoon. Markets have given a good correction. Today also, markets have broken the support levels. If we talk of Nifty has broken the levels of 11,000. Till the time 11,050 is not taken away convincingly on higher side, it's better to avoid long positions. Once Nifty is able to break 11,050 on higher side, then we will see a good bounce back or good upside move till 11,200 levels. Till the time 11,050 is not taken away, it's better to be on sell side for the downside target of 10,900, and if 10,900 is taken away, we can see move till 10,850 levels. I think immediately the range for Nifty is placed between 10,800, 10,850 on lower side to 11,100, 11,200 on higher side. This would be the immediate range for Nifty for next couple of days. As far as view on Bank Nifty is concerned, Bank Nifty is currently quoting at around 25,100 levels. On higher side, it is resistance at around 25,300 levels. Till that time 25,300 is not taken away, it's better to avoid long positions. And on downside, a closing below 25,000 will take index to 24,700 levels in next couple of days.
All right, can we have your stock strategies as well, Sumeet?
Yes, absolutely. Well, the first stock for the day is Hindalco. Hindalco is looking good to me. I think one can initiate long positions in Hindalco at the current market price. If there is a dip of around 3 to 4 points from present levels, then that should be used as a buying opportunity. Downside, one can maintain small stop loss of around 235 levels on lower side for the upside target of 250 and 255 levels in next couple of days. The second pick for the day is Dabur. Dabur is looking weak on charts. It has broken the support levels. There is a possibility that the downside move can continue, and on downside we can see levels of around 415. So for a trading perspective, one can initiate sell positions in Dabur at the current market price with a stop loss to be placed at 441 on higher side for the downside target of 415 levels.
Okay, got that. Hemen, you too have two buy calls in this market.
Yes, maybe buys can be avoided, but a short, I maybe script specific, but otherwise generally I think it's too oversold for a short. But having said that, a buy on NIT Tech at 1230, stop loss 1215, target 1260, Devina. Secondly, I think I'm hiding me an IT because that's the only saving grace. I'm not sure for how long, but as of now it is. Buy on MGL, stop at around 825, stop loss 815, target 845. I'm playing for a rebound, a recovery in both the stocks. I'm not saying it's a rally, but a recovery.
Okay. Sanjiv Bhasin of IIFL is also joining us on the show right now. Sanjiv, good afternoon to you. I'm not sure we can call it a very good afternoon, but what's the sense around what's been happening in the markets over the last two trading sessions, and do you see this, abating for a while?
Yeah, hi. So it's a very good afternoon. If you've been waiting to buy, and we thought there was a lot of froth around that 11,700, so we actually thought that you would get 10,800 to 11,000 on the Nifty in the end. Now it coming in such a way is actually a good spot because we know where the devil is. So the shadow banker which has dragged the market is actually going to be addressed by the government. We see yields is getting softer, we see the rupee stabilizing, and we know that the government bailouts is imminent. We've seen that in the money market today. So again, the volatility can extend for the next 2 weeks, but again, these are opportunities to buy. In a bull market, you will get corrections which are unannounced, but they come because of some paradox factor. So today it's a shadow banker, and now we know the devil. So I would be rather sanguine and look to increase my stakes in certain stocks, particularly select NBFCs. And we think that there is a lot of value destruction which has taken place, which was unwarranted. And if you can sit through the next 2 weeks, then you should be riding your way to the bank in a much better way.
Sanjiv, good afternoon. Neeraj here. So the question is, then everybody agreed that NBFCs had shot on the upside and therefore a correction was due. Now some of these have corrected, almost all of these have corrected, some more than the others. But is this more a reversion to mean? And could there be some more downside considering 2 or 3 factors? One, the immediate crunch of credit in select papers. 2, the cost of funds moving up for these NBFCs, and therefore naturally a NIM correction that we will see in the ensuing year. Would these be factors to take the valuations down further and therefore the stock price is lower from where they are right now?
So Neeraj, let's look at the last 2 years. NBFCs have been the toast of the town. On the back that we were seeing credit expand, they took the share of the PSU banks and so on. Now yes, there is a paradox that there will be a short-term blip on the lending, the cost of money will rise. But am I seeing credit expand in a robust fashion? Definitely. Look at the car sales, look at the consumption sales. There is no blip. Now, obviously, you put the 3 imponderables, that's oil, bond yield, and rupee. I think most of them are mostly, they've reached their saturation points. On the NBFCs, like I said, you can't brush everything in one tar just because of one shadow bank. So as a disclosure, we've used Bajaj Finance to buy today. We have also used this fall to buy Yes Bank. These were two stocks which we had less position, and we are now thinking that we are relatively comfort. So if I name three stocks, it would be Bajaj Finance, HDFC, L&T Finance, Equitas. These are four names which we are very comfortable. The managements have been very clear about the way forward. And if you get a blip, it will be a one-quarter blip where cost of money rises. We see the government intervention. We see that the other headwinds may now start to relinquish, because now you know what the devil has been. It's not much of a global cue. It's more to do with the India-centric shadow bank.
All right. So pretty candid about the names that he likes here. So Yes Bank, Bajaj Finance, L&T Finance, and Equitas. These are a few names that Sanjiv Bhasin is nibbling into in this current fall. When L&T Finance Holdings is at 132. Hemen, on the stock on the charts, L&T Finance?
I think, firstly, a disclosure, I have a holding in L&T Finance. Devina, I think we've seen it come off from 190. Downside appears limited. We are deeply oversold. We've been down for almost 6 weeks in a row. One gets a feeling that if yesterday's low holds, I think it could. A bounce in the offing, and more importantly, from a slightly longer term point of view, Devina, I think we're on the fourth wave on the monthly charts. The entire fifth wave is left. I'd stick my neck out and say we're at 132. I'm looking at 240 in the next 24 to 30 months. But that's a long-term call. Currently, I think it's one of the stocks even I'd pitch for in a market like this. I think it's a great opportunity from a slightly longer-term point of view.
Sanjiv, I mean, up until now, talks were of safer haven bet and stocks that you can probably hide behind in this market are pharma, IT. Today's session, IT has seen a complete uproar. TCS life highs. We've got Infosys. We've got the other smaller names also joining the party. But what's your sense on, how long can we see this move continue for this bucket?
Well, that becomes a defensive area to hide in, though we think that the valuations are very, very stressed. If there is one stock we like, it is HCL Tech, but we've had a positive coverage from 925. We still think that if it remains at this 1100, you can still look for a target of 1300. But, if I suggested 5-6 stocks, they can be mixed, but I'm very bullish on ITC, L&T, and I'm suggesting a basket here. So ITC, L&T, Sun, Ultratech, JSW Steel and Maruti. I think if you do a sip in these for the next 16 weeks, you will actually turn out to be a winner. So it's not including any IT name, because I think the rupee is not going to breach 73 according to me. Secondly, I think a large part of it's a myth that their margins rise because of a weak rupee. I have not seen that in the last 5, 7, 10 years. Margins are going to be same school, only they give you a good value pick because they are cash rich. I would rather play the pharma names: Lupin, Dr. Reddy, Aurobindo, Divi's Lab. These are very, very strong names, and I would use all declines to buy these, maybe in a sip or outrightly, but have a little bit of a longer window, because once this uncertainty in the next 2-3 weeks is over, you should be much, much better placed, and these will be a thing of the past.
Okay, so Aurobindo and a couple of other pharma names are amongst ideas that Sanjiv would be comfortable putting in money to work. Sanjiv, today the collateral damage is being seen on autos as well. iShares, Maruti, M&M, all of them have corrected. Again, in a lot of cases, iShares, for example, steep valuations, but a Maruti, the market leader, having corrected almost 20% or slightly more than that from the calendar year highs. So I can understand now the nervousness around maybe higher cost of borrowings and therefore higher interest rates and all of that might be working in, and maybe higher steel cost and therefore the impact on margins. But is the correction pricing in those negatives for a company like Maruti?
Yeah, good point. I think it's priced in that, and also if you forgot to mention the Kerala flood. There is a huge demand for the car from there, and I met someone and they explained to me that this next quarter could be a slightly weaker one. But you know, Kerala, that state is a very cash-rich state, and I see rebuilding happening in a much better fashion. There will be funds from overseas. So if I had to, you know, say names, Tata, Maruti, Asian Paints, and agree you know, something in cable and plywood, a Finolex cable. These would be core constituents which would do very well once this rebuilding starts. And I think, you know, the average person from there has a much higher standard of living and the average incomes. So Maruti should see with a hiatus, if not this quarter, the next quarter coming back very strongly. We've seen 3-4 negatives in the shape of higher raw material costs, problem on financing of the EMIs. But you know, it's too large a company to miss out. And if you don't have it in your portfolio, then this 20% is actually an opportunity to buy. I still think in the next 1 year, auto should be up and running. Not 1 year, I would say rather Diwali onwards. And again, Eicher and Maruti and Mahindra would stand out over there in the crowd.
Okay. Anything within the two-wheeler pocket? I mean, you know, we just did an analysis, of how Bajaj Auto is losing, you know, some market share within certain segments to its competitor Hero MotoCorp. What's the idea here, and you know, how would you pitch one against the other?
So Bajaj Auto came out with the startling numbers. The volumes are good, but the margins have fallen for the first time. And that clearly indicated that there is a competition war going on. And to gain market share, they are sufficing with a little bit of margin. But you know, the biggest kicker for Bajaj Auto is the subcontinent sales outside India. And with a weak rupee, I think they will stand to gain on the treasury front. And you know, that market is very robust. So I would be contrarian. I think this margin compression can be there for 2 quarters. But once we get past, come closer to Diwali and so on, I think festive sales should see a strong rebound. We've anyway see consumption-led buying being very, very strong on the back of MSP, on the back of the GST reduction. And you know, I see no reduction in that. I think this was one hiatus. It's more on the face of it rather than on practical. And we'll be up and about in the next 2-3 weeks where you will have left this behind you.
Sanjiv, anything in Central Bank of India individually? That stock is being taken to the cleaners almost every second day, down 20% in Friday, down 16% today. And if not this one, some of the other smaller PSU banks.
Yeah, now that the government is also doing a lot of consolidation. That's their way of trying to, you know, merge the stronger ones into the larger. In a longer term, it's a very good strategy. It may pay off, but in the shorter run, there is pain. And when you see yields rising and you realize that some of the pain of ILNFS and its, you know, subsidiaries is going to be borne by some of the banks, then these become obvious choices. But, you know, you'll have to take it with a pinch of salt. I still think State Bank will come with very, very good numbers, and in the next 2 quarters, they have indicated almost a 52,000 crore write back, given that most of their asset quality has been cleansed, and we think that State Bank should be a standout.
All right. I don't think it's pertinent to ask you which stocks you like, because you've given us a whole list of them, Sanjiv. Thanks very much for joining us. Really appreciate you taking out the time. Sanjiv Bhasin there with his views on the markets.
And specific stocks as well. In fact, you know, I would just want to take a couple of those names out there to Sumeet Bagadia. Sumeet, if I were to look at some of those NBFCs, what do the charts suggest? Say a Bajaj Finance.
See, the charts has given a breakdown. Looking at the chart, it seems that in last 10 to 12 days time horizon, we have seen a one-way downswing from the higher levels. And now immediately it seems that there is a possibility that we might test 200 DMA levels, that is somewhere at around 2080, 2100 levels. It's currently quoting at around 20 to 56. I think those who have taken short positions in the stock can hold on the existing sell positions till the time the stock does not give any reversal or any signs of pullback. It's better to be on sell side. 2260 is the current market price. High side, it has resistance at around 2370, 2380 levels. Till the time these levels are not taken away convincingly, it's better to be on sell side. And on downside, we can expect stock to touch levels of around 2100 or even 2080. Breakout and closing about 2380 will take stock prices to higher levels. Till the time these levels are not taken away, it's better to be on sell side.
Okay. Stay on, gentlemen. So much more to talk about since we've been talking about banks and financials and NBFCs. Let's hear out what Suresh Ganapathy, head of financials at Macquarie Research, makes of the sudden jitters around the broader financial space.
Yeah, see, there is, of course, liquidity concerns, but I don't think there are insolvency concerns in these NBFCs. The last couple of years have been pretty good time for all the NBFCs in terms of post-demonetization flows have been very good, liquidity has been pretty good. So clearly the NBFC benefited out of the fact that the cost of funds was pretty low and they could grow their balance sheet pretty aggressively. And clearly the easy liquidity situation really helped them to grow their balance sheets pretty well. But then clearly in the last couple of months, liquidity has been very tight, be it macro-related issues or be it domestic related factors, and the IIFL contagion risk is definitely there, and it is slowly spread on to some of the other companies also, where investors are definitely taking a call that it's a big issue when it comes to really subscribing to some of these relatively low quality papers. And more importantly, what exactly happens is that there is a lack of trust, or in what I call it as a trust deficit, and sometimes that can really cause a lot of problem, and that's what we are seeing currently in the markets. But yes, liquidity will remain tight. It's going to be a tough time to be in the NBFC space, to be honest, as an investor. But I don't see insolvency issues with respect to any of these NBFCs.
Okay, a couple of follow-up questions. So one, it's not fair to draw a direct comparison between what has happened at IIFL and what could be concerns at the NBFC space, right? We're talking about an infra financier versus housing finance companies where the portfolio is a little bit more predictable, no?
Sure, that's true. But then, you know, we have heard concerns about the fact that many of these housing finance companies do commercial real estate lending, but then that is disguised as housing loans, right? So if you look at some of these housing finance companies, they do have a reasonable 30 to 40% of the portfolio not exposed to the pure residential forms of financing, and where there could be some causes of concern. So be it loan against property, be it lending to the residential developers where there has been an issue. Specifically after RERA, clearly some of the smaller developers have been in a bad shape. So I think RBI is concerned about the fact that lending to the NBFCs has picked up quite significantly, specifically housing finance companies. And RBI is always very worried about banks having an exposure to the real estate sector. We have seen time and again RBI coming out with rules with respect to banks curtailing or curbing lending to the commercial real estate sector. And taking an exposure to the housing finance companies, an indirect way to play the lending to the commercial real estate sector. I'm not sure how well banks are when it comes to managing the end use of funds. So an NBFC can borrow, but then they can deploy it for non-residential housing finance projects, right? So that's where the worry is emanating from. So yes, it's not as serious as an IIFL, but then there are some causes of concern in some of these NBFCs.
On the funding side, so one issue is that liquidity is tight at a system level, and the second issue is some of this trust deficit will probably play into rates for individual, perhaps at least the lower rated NBFCs. So it's a spread issue now?
Yes, of course. So clearly what we believe specifically in some of these segments like housing finance, where there is a lot of competition and banks compete pretty heavily, and pricing power is still not there for anybody in the system. Specifically, all these NBFCs are price takers in the housing finance segment. What could exactly happen is there could be severe compression in margins, and also there could be a reduction in growth, because that's where you need to take a call, a fine balance. If you want to grow at a lower margin or you want to grow only at a higher margin, right? So there will be a compromise done between NBFCs about how calibrated your growth should be. So there will be obviously an impact both on growth as well as spreads or margins for all these, not only housing finance companies, for all the non-banking financial companies, to be honest.
Okay. What did you make of the statements that came in yesterday, both from the RBI, SEBI, and then this morning from the finance minister, saying that we'll ensure money, flows through the NBFC sector? Is this just sort of calming the nerves, or do we?
Yeah, of course. I mean, if you look at the regulator's responsibility, they have to ensure that the confidence remains in the both debt markets as well as equity markets, right? And considering the interconnectedness of the financial sector, they really cannot afford any large financial institution to go belly under. So it's obvious that the regulators as well as the government will have to step in and soothe the markets, specifically the bond markets, so that the contagion risk doesn't necessarily spread across all the other financial institutions. And I think what they've done obviously is right, but then that doesn't necessarily mean that we are looking at a pretty easy liquidity scenario, or let me put it that way, an easy interest rate scenario for any of these.
Good news, guys. Got a promotion and a damn good raise.
Congrats, beta.
Congrats, मेरी तरफ से भी.
From mama too.
वाह, raise? अब तो इंश्योरेंस पॉलिसी ले ले.
इंश्योरेंस? कौन सी कंपनी से लूं?
सोचना क्या? चूज वही जिस पर हो पूरा भरोसा.
वीरू, go for convenience. My company is online, quick and simple.
बेटा, but policy समझाएगा कौन?
वेबसाइट पे सब है पापा. I can even call and ask.
क्लेम सेटलमेंट का रेशो क्या है? मेरी कंपनी का 98% से ज्यादा है.
That's good, but आज की generation wants everything online. Easy premium payment options, loan facilities और wide range of products.
अरे पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना. Same choice. LIC.
LIC trending with times. 62 सालों से हर generation की पसंद.
When I started juicing to bounce back from a serious injury, I had no idea that it would turn into a passion, that would turn into a brand that provides healthy choices to millions of consumers. Today, my brand is a household name. I am Anuj Rakyan, and my story is a clean and a flavorful one. I'm the raw pressery guy, and I'm here to tell you my story only on Aegon's of Business.
Aegon's of Business never stop. Only on Bloomberg Quint.
Hi, I'm Jatin Khimani. I'll be at Investors Carnival this year talking about the art of selling stocks. Watch me on Bloomberg Quint.
Back with countdown right here on Bloomberg Quint. 32 minutes left for the markets to shut. Let's just bring up what the European picture is looking like and see whether those markets have some luck of a rub of green on their side. No, not quite. It's a flattish start to the trading day today. However, worse off compared to what happened in Friday's session, because Friday the European markets are doing rather okay for themselves. We have recovered a little bit of lost ground. Bring up the Nifty intraday, and we are now down. Well, actually, we are now above the 11,000 mark, so that is one. Just down about 137 points. So a bit of a pull back, really. I think we've been talking about how the positions around that 11,000 mark are quite strong. And if we stay below, then some unwinding. For now, we seem to be defending 11,000.
That had a heavy put build up, so it was giving you that support base on the downside, and if that's taken down, then then at the lower end there is not much of concentration to give you that support base across various strikes. So there'll be probably strikes which start getting active now.
Yeah. But twice in 2 days, Devina, we've broken the 11,000 mark, only to come up. I'm not saying that this is conclusive and therefore we will end higher than where we are right now. But twice in 2 days, we're trying to defend the 11,000 mark quite strongly. Can't say the same for the Nifty Bank, but the 11,000 mark on the Nifty for now, just about holding out in trade. The stock or the set of stocks which are doing well, and TCS as a stock is doing remarkably well. That's up about 4.3% now, trading at life highs for itself, and why? And it's actually having an impact on some of the others too. So today, in terms of heavyweights, I think if you look at the contributors list, I think it will be TCS, Reliance, Infosys, and then maybe you'll be able to throw in a Coal India or a Yes Bank out there, Tech Mahindra out there, but it's TCS, Reliance, and Infosys doing extremely well for itself. Hemen, is there a trade on the Nifty IT today?
Frankly speaking, I'm not so bullish on the IT sector. People hide in it whenever there's panic in the market. So I think that's what happened. And if you remove TCS from the scheme of things, I think there's nothing much. So yeah, I believe the Nifty IT is either has or is on the verge of posting a fresh all-time high. No, but I still won't go long because I also feel that 72, 90, 73 is sacrosanct as far as the rupee-dollar equation is concerned, at least for the time being. I would be unpleasantly surprised if it knocks off 73 and goes up. So I have a feeling IT has done its bit, and stock specific, yeah, I think TCS seems more like a sectoral allocation in a bad market, but no, I wouldn't go long.
Okay.
To your main question.
All right. Let's bring in Gurmeet Chadha of Complete Circle Consultancy. He's joining us on the show right now. Gurmeet, good afternoon to you. I'm going to pick a stock which from the auto pack, M&M, which was probably one of the stocks which had some bit of semblance up until now. The entire space has been pulling back, and so is M&M. But is this an opportunity that one should use to enter into the stock?
Hi. See, I think M&M has been holding steady for a while now. If you remember, since last year when the bonus issue came, the PE bonus price was around 1300, 1400 levels. And even after the bonus, it's been about around 950 for a long time. It's one of the cheapest stocks in the auto pack, about 15 times, 16 times forward earnings. By like current levels, even Maruti is now 20 times. So I think the new model, which is Marismo, as well as the tractor sales, continue to do well. So I'll be, so M&M is a good buy, not just because it has corrected today, but more from a long-term holding. But at current price levels, I think some of the other auto stocks and OEM companies where the correction is for non-fundamental reasons more, and more because of sentiment, would be more and accumulate at these levels rather than M&M.
Gurmeet, good afternoon. And would that be true for some of the others too? We've already discussed Maruti and Mahindra as with you, now Mahindra and Mahindra. But the one that has also gotten beaten down quite strongly is Eicher Motors. It's now sub 25,000 or in and around those levels. What happens here? Yeah, 25,967. So down 7% today. They're shaved off quite considerably from those highs.
Neeraj, accumulate on tips, Eicher. I really don't see. See, it is one company which has the ability to pass on higher commodity prices. They are into high-end bikes. The CV business also seems to be doing fine. I think all components of the business are doing fairly well. And as I said, there are pockets which are falling for could be margin calls being triggered, could be profit booking, could be selling in few liquid counters. I think anything in that quality name which falls for non-fundamental reasons, one has to buy on dips. But as I said, I've been discussing, stagger it slowly. Don't be in a rush because the liquidity issues, I think, will take a little more time to settle it. If you look at the secondary market debt premiums, they're telling you a story that all is not well right now, and I think it will take time. So I think you'll get enough opportunities to gradually add on it. But keep buying on dips. Maybe spread it over next 4 to 6 weeks.
Gurmeet, if you had to be a little adventurous in this market, what would you probably look at?
In the auto pack, I think one stock which is right now looks a very compelling. I would not say buy, but something you can right now would like to add is Motherson Sumi. I think the management has given a great guidance for FY20, which is almost about 18 billion of sales. They have in the past shown, the ability to turn around acquisitions and add value. It's the global leader in wiring harness, especially for CVs. It's the second largest in rear view mirrors. It also supplies a host of, plastic auto components. To me, I think that looks to be a very, very good buy around 250 levels. But as I said, when you have sentiment-driven selling, might as well make sense to go slow on accumulation.
All right. Gurmeet liking Motherson Sumi out there. Stocks trading at 253. A Diwan Housing, Hemen, obviously right now you wouldn't want to take a big position or any sort of a call on the stock, but just looking at the technicals and the levels, the bounce back has happened today, obviously not to the extent that the cuts were, but while on the fundamental side there has been clarity given out, technically what's the showcase for this one?
Devina, 610 to 275 in a single trading session. Frankly speaking, that wipes out the last almost 12 to 14 month gains in a single trading session. I would ideally need a top and bottom crossing for the wave counts that I look at. But coming back to your main question, I have a feeling it's been overdone on the downside, but even the downside is very far. We are at 400 now. The downside was below 280, Devina. So it's too far away to take a call, but I have a feeling that no, it's going to stabilize over here. Ideally, it should stabilize. I'm not going to say it's going to stabilize. Ideally, it should. We've had a large range. We are within the range and trying to claw back. If we cross 440, I think we could see some sort of further upside coming in. But one, I think the lower looks like remaining untouched, and we are going to, you know, meander aimlessly without anything happening. It's a very large range, but as of now, the range is, I think, 370 and 440. But the VIX is going up, so that's a further problem for the market.
All right. In fact, talking about the VIX, just pull that up on your screens. We've been talking about how it's at a 5-month high. Currently, at, I think, 17 now. So 17.14. That's a 10% intraday move on India VIX. It doesn't all go too well. For M&M, we were talking about that stock. It's now down below. It's a 100-day moving average. So 100-day moving average is about 912. The stock's trading at 896. Sumeet, I want to come to you on some of these PSU banks, if you haven't already spoken about them. The likes of a Lakshmi Vilas Bank, we've got a query on that one. What do we do with that?
See, the stock has given some correction and then it's giving a range-bound move. It seems that the stock has technical support at lower levels, somewhere at around 87. I think till the time these levels are not taken away, one can hold on the existing long positions. Better to avoid fresh long. I think stock needs to give clear breakout above 95 levels. Once the stock is able to break 95 levels on closing basis, then we will see a good move till 110 levels. Till the time the resistance is not taken away, the stock will move in a range. At the same time, if the stock is able to break 85, 87 levels on lower side, then there is a possibility that we might see an extended sell-off in which we can see levels of around 75 or even 70. So 85 should be the strict stop loss for long positions. Avoid fresh long till the time the stock is not able to break 95 on higher side. One can hold on the existing long positions with a strict stop loss.
Okay, got that. Let's quickly look at a few stocks then and the kind of price moves we are seeing. Jindal Stainless now at 60 is down 11.5% in intraday trade. Vakrangi is trading at 32, which is down 10%. From the sugar pack, Bajaj Hindustan down 9.6%. Motherson Sumi is down 8%. In Edelweiss is now at 216. The stock was trading at 212 just a few minutes back. It's picked up a bit, so the stock now down 8.5%. Chola Mandalam, that's down 7.75%. You've got IRB Infra, Indiabulls Housing, National Fertilizers, 7.5% cut on some of these stocks.
Well, okay, before we move any further though, and as we've discussed, while some of these large cap IT names are doing okay, we're not seeing the same necessarily percolate to some of the mid-sized names as well. There is some traction in Infibeam, but that's for completely different reasons. Please keep that at the back of your mind. The ones which have a fundamental reason for moving up, 2 or 3 of them, ITD Cementation as we discussed, up about 5% after that order win. L&T Info has some gains, about 2.5%, but those gainers are few and far in between. Even the mid-cap space has been peppered with a lot of losses. Gurmeet, where within this, okay, let me rephrase my question. 2 pockets which were the favorites, one on which the business model has gotten altered a bit, the other one on which we don't have any information as yet, but there is belief that there could be some regulatory pressures, AMCs and life insurance. Now, what do you do here if you were an investor into an HDFC AMC or a Reliance Nippon Asset Management at price levels which were 10-15% higher? Would you go to the extent of averaging those investments, or do you believe the models have been changed so much that there could be fundamentally some more downside or some more time correction into both the AMC names?
Neeraj, looks, I would, as I said, accumulate because I'm long-term positive on both AMC and life insurance, with the financialization of savings scheme and India having no social net or retirement kind of a formalized social security net. I think even for AMCs, I think there is a little bit of an overreaction because the SEBI circular of revised expense ratios, the effective date hasn't been announced. So technically, as far as the near-term quarterly earnings go, I don't see any impact coming. Secondly, also, basis my conversation with AMC CEOs, they are likely to pass on most of the TER reduction to the intermediaries. So that would, negate. It will be not as big as probably the stock has reacted. So accumulate for AMCs. Life insurance.
Gurmeet, if I can come in. Gurmeet, if I can come in. Just a small counter here. The counter is if indeed the AMCs are not going to give upfront commissions for closed-ended schemes to distributors, as also the fact that the expense ratios have been cut down and some of these costs will be passed on to distributors or agents, as the case may be, and there is a regulatory or a tax advantage that ULIPs enjoy over mutual fund schemes at the current point of time, would we, once these norms get implemented, see distributors push ULIPs at the cost of AMCs, and therefore are we looking at a possibility of maybe even negative flows into AMCs once these norms come into play? And is that something that is weighing in on these stocks?
Partially, yes, Neeraj. But as I said, anything which is good for investors in the long run, is both volume and earnings accretive to all the players. So there could be I've been in this industry for 15 years. We saw entry load go away in 2007, and there were a lot of obituaries written that distribution would change. Also, to answer your question, there's already the movement towards AIFs and PMS, which has already started happening, especially as far as the large boutique firms are concerned. So they will evolve a product mix, which is a combination of mutual funds where the corpuses are a little lower because there the TR reduction is not significant, and smart movement to even AIF platform. But as I said, the volume growth to me doesn't look to slow down. If you even see the SIP book, it's gone slow. There are some news of some terminations happening more in the small and mid cap levels, but I don't see volumes being negative. The incremental growth will slow down. That's to do more with volatility rather than the change in the expense. So I would look at this as a accumulation. Something. If HDFC is now at this price, 7% of the assets. On the IPO listing, it was 11% of the assets. Reliance is probably now 4% of the assets it manages. So I think the valuations are making me believe that one should try and accumulate on dips rather than stay away from it.
All right, that's RNAM for you, which is at 172. Last 5 days have been quite brutal for this counter. It's down 5.5% in intraday trade, and that shows you the kind of decline in the last 5 days that the stock has seen. So almost 20-25% given up in a matter of 5 trading sessions. For HDFC AMC, you should pull that one up as well to see the kind of pricing action that that counter too has witnessed. At 1330 now, it's given up 4% in intraday trade. That's at the lowest point of the day right now, from levels of closer to about 1800. The stock's now at 1330, and there are still very limited takers. Though we just heard Gurmeet saying that this is an opportunity to probably look at collecting these stocks in the portfolio from a long-term point of view. But higher cost of funds may further compress valuations for some of these NBFCs, says Jyoti Vardhan Jaipuria of Veda Investments. In chat with us earlier today, he also spoke about the factors that may have triggered the sharp sell-off in this space. Listen.
Part of the reason is the valuation, because if you see some of the larger NBFCs, over the last 2 years, they've got re-rated tremendously. So you have a lot of them trading at like 4 times price to book, 5 times price to book, etc. So those are the NBFCs where you're seeing a bit of valuation compression, because it's good quality, people want to buy it, but it's the valuation which you question, especially in an environment where once the NIMs start to compress, it will compress for everyone. It's like it may compress a bit for the larger ones, and the better ones, it may compress a lot for some of the smaller NBFCs, but they tend to compress for everybody. And at that time, if your valuation is extreme, then that's why you start getting worried that we could see a valuation compression, and nobody would really wonder why the valuations are compressing. So that's the risk always when you're playing some of these things, that near term, when the environment turns bad and if valuations are very high, then you can get a valuation compression. I think it's not so much the liquidity, because a lot of them are assuming that they'll be able to roll over, but I think it's going to be the cost of funding is going to go up, and there is a difficulty in passing that cost of funding straight off, because over the last 2 years when the cost of funding was going down, it was not like they have passed on everything. They managed to increase their spreads, and so in an environment like this, when the cost of funding goes up, what we are going to probably see is a bit of compression in the spreads. So there'll be NIM compression which will come through, and there could be a bit of hesitancy in rolling over everything. So if there were some NBFCs which were running a very high ALM mismatch, where they were borrowing short term and lending long term, those are the NBFCs which will see most pain coming through. But even for people who are running a normal ALM, they'll probably see some compression in the NIM. So I think it's the NIM compression which is going to start hurting valuations. I think you'll get volatility over the next few months, and I think it's not going to come so much from the state elections, but it's probably going to come from the international environment, because one is you have Fed which is raising rates. They'll raise again in this week on Wednesday when they meet. So it is like, do they go for another rate increase in December, or do they stand still, and what is their outlook for the next 1 year rate increase, which is what people will be watching, because there's a press conference also along with this meet. The second is the trade war, which somewhere a lot of people had thought would get settled, but suddenly we've had China which has pulled out of trade talks now. So they are probably sensing that maybe till the November elections in the US, there's no point in having a trade talk, they'll do it later. And sometimes some of these things have a habit of suddenly upsetting you a lot. So there are a couple of things on the horizon in the world which probably is going to cause volatility. You've seen a lot of volatility in emerging markets. India has in some sense been a safe haven in that whole environment till we had this Friday bubble. But otherwise, I think India probably still remains relatively a good space. But I think the world is going to be quite volatile over the next 6-8 weeks. And I think the Indian markets will also be a volatile space.
Well, volatility it is. At the peak, actually hit India VIX once before we get the index again, because that recovery, if at all, we can call it a recovery, is short-lived. 17.5 for India VIX. These are the highest levels that I've seen for a while. The Nifty at 10,960 is now giving up some of those gains. So we will close sub the 11,000 mark from the looks of it. A bunch of names correcting. Indiabulls Housing Finance is down another 8%. HDFC for the record is now down at the lowest point of the day. It's the third highest loser on the index at 6.66%. So that is looking weak too. And it's not, as we've been saying, it's not just the financials, because stocks like Bharti Airtel too have corrected about 4%. Financials are weak, autos are weak, and telecom and some other pockets too are giving company. Vodafone Idea naturally would be down in trade today. Hemen, what do you do with these names? One of them is Indiabulls Housing, and down 8%. Very volatile Friday, not a volatile day, but down another 8% today. So about 16-17% in the last 2 days.
We've seen a 15% addition in the OI today, Neeraj. And if you look at the cash market volumes, we still have 12 minutes left. We've crossed 2.5 crores on NSE, which is, I think, the single day volumes are probably the highest in the last 2 years, Neeraj, 1.5 years. So, frankly speaking, it remains same. I think we've had a very large trading range. We try to test the bottom. If the bottom holds, I think it will. We'll spend a lot of time moving sideways without any directional bias, and finally start bottoming out or stabilizing. As of now, I think it's a bit too raw to take that call, but yesterday's low was too far away. I think we should be heading over a period of time for a higher bottom.
Sumeet Bagadia, I believe you have a call on ONGC.
Yes, you are right. See, ONGC is looking good to me. ONGC, there seems like from here on we can see a move of 8 to 10 rupees in next couple of days. So one can use this dips in ONGC as a buying opportunity. In fact, one can have BTST trade in ONGC at the current market price, that is at around 180, 180.50, with a stop loss to be placed at 176 levels on lower side. For the upside target of 185 is the immediate target, and if 185 is taken away, then we can see move till 190 levels. So one can initiate long positions in ONGC at the current market price.
Alright, so buy today, sell tomorrow idea on ONGC from Sumeet. A few other names. Al-Nafis Transport is up 10%. We already spoke about how Diwan Housing has moved up smartly today. Torrent Power is up 3.5%. Praj Industries is up 3.5%. That's at 103. Should look at what a Page is also doing. If you can pull that stock up over the last few days, that stock also has witnessed some amount of pain. Is down about 2.5%. Not as much as what the carnage across the rest of the market is. But anything on a Page, Hemen?
Oh, high value stock movements are right, slightly jagged, but relative strength coming in. Notwithstanding what happened on Friday, Devina, it's in a range between 31.5 and 34.500, and we remain within the range with the odd hiccup on Friday, but we've remained comfortably above this level. So I'd say 31.5 and 34.500 we remain till we see a breakout on either side. So the market could bring it further, but standalone it still stands stronger and better. But yeah, if you have to gain anything significant, I think we need to close about 34.500, which we haven't in the last 11 or 12 trading sessions.
Okay, so Sumeet, by the way, so Sumeet Bagadia's closing strategy is ONGC. Hemen, what is your top closing strategy?
BTST on the WIX, but seriously speaking, Neeraj, BTST either on Tata Power or Reliance Industries, Torrent Power or Reliance Industries. I'd go with Reliance Industries.
So two BTSTs on a day when the market is down about 1.7%.
No, go with Reliance Industries between a Torrent and a...
Yeah, but it's a BTST. All I'm saying is there's a BTST, BTST for Hemen, BTST for Sumeet Bagadia on a day when the market is down about 1.7% and the Nifty Bank is down about 2.6% at 680 points. So those are the top two closing strategies from our experts, and both are upstream names, Reliance as well.
But what
as
levels,
ONGC.
Hemen, on Reliance?
We're at 1231, so around 1230, 9 and 18, 9 rupee stop loss, 18 rupee target.
TCS is now close to 5 percentage points higher. It's a big move. The stock is trading at life highs for itself. If one were to trade a Yes Bank, before getting a fundamental call, I mean, just very quickly, if one were to trade a Yes Bank, how would you do it? It's absolutely flat right now.
If I had an FNO option, I'd sell the next month 200 put.
Okay, so positive outlook. Okay.
Interesting.
Gurmeet, anything within the IT pack and TCS in particular?
Those are too high for now. I think valuations won't give you comfort in a market like this. So neutral. Otherwise, I'm long-term positive, but neutral at these price levels on IT. Some of the private banks, yes, you talked about. Yes, I would prefer Axis over the others. I think till the time the management churn is on and there could be legal battles, I think it's an avoid as far as Yes Bank is concerned. Kotak and HDFC, 20% off almost from the highs. So, and along with Axis.
Interesting. IndusInd Bank too, by the way, is down in the session today, down about 4%. So all private banks have been, save for HDFC Bank, by the way, have been taken to the cleaners. What else? Within the BSE 500 list of stocks, mind you, telecom is weak, yes, and we've established that. What is not weak, and I think Devina spoke at length about the likes of Praj and some of the others, IGL is about 2.5% too. So there's some strength out there. Gurmeet, just one final question from mine. This revision in gas prices that we're likely to see post October, or from the beginning of October, maybe that is also keeping the stocks like All India, ONGC afloat. IGL and some of the others too will pass on and therefore will take price hikes there. Within this upstream space, are you bullish on anything in a scenario like this, or would you believe that if the tide is going lower, even the stronger boats will lose some levels?
Neeraj, I think as I keep saying, I think IGL positive. I think this is one stock which has been also been added in a lot of large portfolios by a lot of MFs. I've been speaking to a lot of fund managers. Also added in a couple of large PMS schemes because it's a fundamental story, and I think the company has a great infrastructure, great network. On the other things, as I said, I'm just going slow on quality names. Reason being, when you have a sentiment-driven, correction, Maruti at 7,600 levels, to me, there is no big concern. But it's just that as you rightly said, when the tide is turning, the quality names also fall. But they bounce back faster. They always make a lower low and a higher high with every pullback, and which is what you need to remember. That those are the old lessons. If there is irrationality with some stocks, I think that's the time to probably start getting into it, because when it touches even lower, you don't have the courage to buy more. So gradual buying is what is recommended.
All right, Gurmeet, thanks very much for giving us the time. Appreciate you joining in and sharing your views with us on the show. We're about 4 minutes left to go for market closing. A quick chart check on DLF, Hemen.
DLF. Okay, I'd say short-term negatives, but nothing too alarming, frankly speaking. We've gone nowhere. So near-term, yes, I think there's the rest of the market, but I'd say support at 182 and 174 and 168. Seems like a normal decline, Devina, nothing much to read into it. But it's not a short, but I'm not sure if it's a long. It's definitely not a short.
So if you have it in your portfolio, what do you do? Just hold on.
See, if you look at it, 1200, 60, 250 and 184. So from a longer term point of view, I'd say hold.
Okay. Gentlemen, just stay on. Just about 3 minutes left to go for market closing. Let's quickly wrap it all up for you, Neeraj.
Well, yeah, let me wrap up the large caps. They will bring you up to speed with all that's happening across the broader end of the spectrum as well. But yeah, not a great day, and we are convincingly sub the 11,000 mark. And let's see if this opens the floodgates on the next few days for the markets to correct further. The world markets aren't particularly a very happy place today. The mid caps and the Nifty Bank, the principal culprit. The mid caps and the small caps too have gone off. So market breadth is not looking all that great. And today too, fairly high volumes. Let's bring up the list of gainers and losers on the index at least. And you will see financials right up there on the losing side. But first the gainers. So IT, TCS, Infosys, Tech Mahindra, HCL Tech amongst the gainers. Reliance Industries has some gains, about 1%, 1.3 odd percent, but that's about it. We don't really have other gainers per se. ONGC cooled off completely. Look at the losers though. IBUL's Housing 7%. NBFCs and autos, rate sensitives essentially. The top 6 names are all rate sensitives, including auto and including banks and NBFCs. Then you have a Bharti, which is down about 4%. HPCL amongst the OMCs which have gotten clobbered, and Tata Motors as well as Maruti bringing up the list of the top auto losers. So iShares, M&M, Tata Motors, Maruti, all of them correcting quite significantly. Autos is the next worst performing pack in the session today. Devina, the mid caps, difficult to figure out which is the worst performing because a clutch of them have fallen.
Well, if you see the advanced decline ratio, which we will show you, towards in a few moments, you'll see the kind of carnage that you've witnessed across the board and the gap which has actually widened. But a few stocks that took a heavier knock in trade today were the likes of a central bank, and this is the second straight day the stock has lost out, closer to about 20 odd percent. So that stock is down in trade and losing almost about 40 odd percent in 2 trading sessions. You've got Jindal Stainless, which is another name that's showing you deep cuts in intraday trade, 10% loss coming in there. HDIL, and not just HDIL, but the entire real estate basket. If you see the realty index itself is down more than 5%. So this is one of the additions there in terms of the kind of cuts that we are getting. Vakrangi is another name that loses out. Edelweiss trading closer to about 200 odd. So 216 odd was towards the end of trade for an Edelweiss, down about 7.5%. Canfin Homes loses more. Religare, L&T Finance, again the NBFC space is is the main pressure point of trade today. REC is the other one that loses out in trade today. Amongst the gainers, there has been a rebound in Diwan Housing Finance. So that stock, after showing you a 45% cut in Friday's session, has taken, has been stoked by about 11%. IIFL Transport is up in trade today. You've got the likes of a Praj Industries, 3.5%. Parag Milk Foods does okay towards the end of trade today. Remember, there are some export swaps here in the industry, in the dairy and non-dairy segment. The stock's up about 1.3%. Kansai, Nerolac and Reddington are some of the other names that are actually up in trade today towards the end of trade. So we've got about 3 odd seconds left to go for market closing, and there you have it. Market closes, the Nifty as well as the Sensex. Pressure is building up, Neeraj, and though, I mean, hopefully right now we've not closed below Friday's low, which probably could be a slight bit of a silver lining, but you can't say the same for banks because it just seems like a bottomless pit.
Yeah, and interestingly, the Nifty's closed at the lowest point of the day, around that, but Nifty Bank not so much because it's 2.6, or rather, okay, the BSE 500 is 1.9, the Nifty Bank 2 closing in almost at the lowest point of the day. So weak hands for the Sensex, the Nifty and the Nifty Bank, and the mid caps and the small caps getting clobbered as well. Not the best of days. Bring up the market breadth. We're talking about how the breadth would have looked bad. Yeah, it's looked almost terrible. 1:7 odd.
And from the word go. So there was no spot or place on this chart where you actually did see some bit of fight back from the bulls. So it was absolutely an upper hand for the bears today.
Yeah, the volumes, Devina, they were high. 31,000 when we started trade, 41,000 crores on the NSE cash. So not as high as Friday, but very high nevertheless. And the F&O volumes too. I know it's expiry week, but still the Monday to have such volumes is unusual.
Actually, with the NSE cash, it's pretty much in line with what we saw on Friday because we
64,
did see,
yeah.
Yeah, so 20,000 odd here there, and you've got the BSE cash, which is 3,700. F&O, we will see this number increasing towards expiry once we start moving towards Thursday.
Yeah, and the contributors list, you will see autos also out here on the losing list. Yes, you do have M&M, but yeah, financials, HDFC Bank, ICICI Bank, not surprised. And this doesn't quite include the NBFCs, which have also been clobbered out of shape.
Well, IT and Reliance Industries seem to have helped whatever little they could and try to pitch in TCS, life highs for that stock, Reliance Industries. Last 2 days actually not amongst the losers and amongst the gainers. So not bad for that one.
It's well, interesting, but with a fair bit of weakness. Final thoughts from our experts. Sumeet, Bagadia, what do these charts of the mid-cap and the small-cap indices tell you as well? We've been talking at length about the Nifty and the Nifty Bank, but what about the mid-caps and the small-caps and the charts of those indices there?
So they are still looking weak. There is a possibility that from here on we can see a sell-off in which we can see lower levels. I think immediately the mid-cap index says that a more downside stream is left in which we can see a fall of around at least 400 to 500 points from present levels. 17,800 is the Nifty Mid-Cap 100, which is currently which we have seen closing today at 17,830 levels. If the supports of 17,700 are taken away, then there is a possibility that we might see a fall till 17,000 levels. This is the mid-cap Nifty Mid-Cap 100.
Hemen, what's your sense? Realistically, how much more downside until this expiry?
I, frankly speaking, don't think there's too much of a downside. We're at 10,974. Friday's low was 10,866 in the spot. I think that should hold, but I don't see an upside above 11,200 till Friday. I mean, till this expiry. The only fear is the bank Nifty is still at the day's low. A recovery would make it slightly more sanguine, but don't expect to see Nifty breaking Friday's low, but I don't see an upside above 11.2 either.
Okay, don't see the Nifty breaking Friday's low. They are talking about how that probably is a bit of a silver lining for us as well. Hemen, Sumeet, gentlemen, thank you so much for joining in today and giving us your perspectives. Have a good trading week ahead. Well, if you're a bear, maybe you do have a good time, but otherwise bulls are being taken to the cleaners. But yeah, that's it on this leg of Countdown from Devina and me and the team that put this show together. Thanks so much for watching.